Hello everyone, welcome to the channel. Today we're going to be looking at PayPal. We're going to be looking at the stock, we're going to be diving into some charts, we're going to be looking at the PE, forward PE, things like that. I would like to let everyone know that I look at stocks generally from an investing standpoint, so more of that 3 to 5 year range, right? Not that if it shoots up we can't take profit or anything, but if you're more so a trader, this channel may not be exactly what you're looking for, but I would still think there's some information you can get from this or look at, right? So I'm assuming most of you know what PayPal is, what they do, but we're going to look at this stock generally from a perspective that if you have never seen it before. So what I like to do whenever I look at a new stock, I like to look at the 1 year chart. 32% is good. Look at the 5 year, that's a little bit more concerning, and then the all-time, right? So this is a company that IPO'd in the middle of 2015, so it's only been around for about a decade, not even a decade quite. That'd be 9 years. So I mean, 103%, that's not ideal. You know, obviously I'm assuming many people were happy at one time or another. So it clearly has the ability to grow, but obviously we know during the COVID boom, there's many companies that benefited more extremely than some. You know, you got, Zoom obviously blew up during that time, although they were fairly new on the scene. Clorox clearly did well. Companies like Pfizer did well. You can see that represented on the chart, right? And you can see that in many, because all companies are good, but some more extreme than others, right? Many stocks, for example, semis, you can see that they're up during 2020s, they went down, and then they recovered, and are usually, most of them are at all-time highs, except Intel. Yeah, anyways, so it isn't a complete turnoff, but it is something to keep in mind here that over the last 5 years, this company is down 22%, and it does not pay a dividend, right? So you get nothing, no added bonus there as well. PE is more reasonable at 19. I guess if we're looking at it more on the financial services, in the same vein as, I guess, similar to credit cards. Obviously, it's not a credit card, but in that vein, right? Like this PE is a little bit on the low side. Off the top of my head, I think MasterCard's for PE is probably around 35. Visa's somewhere in the low 30s. American Express is somewhere around this 20, so. But anyways, not just stuff off the top of my head. Let's see what their forward PE is. So their forward PE is lower. I remember they've been having growth issues recently and not necessarily guided well. You can see that reflected a little bit in this, the future. I don't know if these are necessarily the earnings they put out or what analysts expect them to do. Companies do it differently, right? But at least according to that, I mean, forward PE is a bit lower, but we aren't necessarily expecting insane growth. We are over the next, compared to the leads, well, not insane growth, but there is growth, considering what they actually hit was 108 and 119, right? That's the estimate. That's what they actually hit, and we're projected 106, 109, 113, 121. So by a year from now. So, but generally, the stock is projected to go sideways for a while again. So, what do I think personally? So there was a time, right? I think right around this range. So basically, it'd be exactly flat around 2023. Where I looked at it and I thought it was pretty juicy, right? I thought it was a good buy. I did not pull the trigger. I didn't really have capital at the time, but I did actually buy some stocks around this time. So I kind of fell out of love with the idea, dug a bit more, and wasn't super interested. However, I don't really know what to think on the stock. It's weird to make a video on it and not necessarily know, right? I don't think it's a bad buy. We're going to look at analysts and we're going to look at what other people think. And often, many of them think it's going to do well. I think if they can even get a little bit of momentum, right? If they can start growing, they don't need to grow at 30% pace, right? They don't. At PE ratios of this, it's not insane. Like if they can grow 10%, right? Start growing 10% every year. This stock's probably going to jump up to PEs in the 20s, so you're going to get that growth there, and you're going to get the 10% consistent growth on top of it, which doesn't sound that insane when we're used to looking at NVIDIA, and the TSMs and the ASMLs of the world, right? That doesn't sound too lucrative, but that's what the S&P 500 averages, right? So I guess the question is, can it do it, right? Let's dive into some risks first, right? One of the risks is, compared to some of the other players in the, what do you want to say, financial services range, they're not one of the biggest dogs, right? You of course, for like credit card companies, you have all those. There's just competition now. There's many instances where PayPal is good. I know it's good for online shopping, right? Like if you buy cards online, maybe TCG Player or stuff on eBay. I know PayPal can be useful then. Things like that. So it definitely has its uses. Also, I think for like donate. I don't pay attention to the streaming space that much. I kind of used to, but I know it's big for donations because you kind of cut out, for example, like, I don't know. I know YouTube takes a large cut of super chats, so they don't take such an extreme cut on PayPal if you donate to someone there. Things like that, right? So, and clearly, I mean, 80 billion is not a small company, but also when we're talking about a space that's growing, right, consistently, look at Visa, look at MasterCard. Look, I know they're not just purely a credit card company, but there is other companies that are continuing to see growth in that. And I guess one of the risks I'm trying to get at for PayPal is they are at a point where it is a possibility that they could be phased out, right? And especially when you even look at like the Apple Card and things like that too. Like there's no like, oh, we have to have PayPal, for our store, for our company. We have to have PayPal. I don't see that, like if you go to a store and they don't take Visa, like I have a MasterCard and I have Visa, right? If I went into the store and they're like, a big chain, right? I'm not talking about like maybe your local ice cream shop. I had one that was in the middle of nowhere. And they would only take, and I think they did take, no, I think they only really took for a while their cash and local checks, which sounds crazy, right? But other than that, like if you go into your Quick Start, imagine them being like, we don't take Visa, right? It's not going to happen. So it's just a risk to consider. Like I'm not saying, they're going to get phased out, but it's a possibility. It's something you have to factor in your picture. Maybe for you, that's a 1/1000th, 1 in 1,000. Maybe for some of you, it's a 5% chance. So I guess that's something you have to estimate and think of. I guess some good thing. I know I only got into one risk there, but I mean, there's not. I think on the other side, there's not a whole lot of downside unless they start shrinking, right? You aren't at 40 PE, right? So this isn't a company like we need that 20% growth to justify this valuation. Like it's not like nothing. Like there's definitely less valued. There's more, how I phrase it like this, there's more reasonably priced stocks if you're just looking off PE valuations. But then again, many of those companies are not growing, so is it really fair, right? But this is not a terrible entry point. 17 PE before, let's say in a year, right? And who knows, they may start guiding up. But I guess this is a stock where what you want to do is you want to look into the leadership, you want to read the earnings statement, and that sounds crazy, right? You want to listen to the earnings call. I have not done that. And you need to say, does this sound like a leadership that is delivering? At least they aren't really missing. I know they missed once, but they aren't missing, so you can kind of take, their word or the analyst's word, right? They're fairly consistent. Excuse me. And this is one where you look at leadership. I think this is a company that will be success. They will live or they will die by leadership. If the leadership can figure things out, they can find paths, they can forge relationships with businesses, they can do that sort of thing, I think this company will be fine and actually will probably do well because I think it's pretty fair valuation. I think it's fairly reasonable. And by fairly reasonable, I think it's a good valuation in the sense that if they turn it around, you're going to make some good money. Not insane amount, but there's certainly some upside. And we've seen them. We've seen them up here, right? And they do mostly online shopping. Everyone was online shopping then, but we've seen that. And online shopping is not going away. It's not, clearly not. So, but then again, they do have the risk of getting phased out. So in my opinion, PayPal is one of those where you should do research on And you can do it here too. I mean, we may even take a look at it. What is it under? I don't know. I never look at the board ratings and stuff like that. It might be under profile. Let's take a quick peek. Yeah, this is where you can see their leadership. Look into their leadership. I know it sounds ridiculous, right? But this is your money. If you're going to put some serious money into it, let's look at the leadership. Let's dive into it. Let's listen to some of the earnings calls. Let's look at what they're saying. What are they trying to get into? Look at the vision that this company has and see if it aligns with what you think is best that they should be doing, and think if you think it'll be successful. And if you do, you will probably make good money in the stock, and it hits, right? That's if their leadership is good and you believe in it and they execute. This will be a stock you will make money in. Now, I don't think this is going to be a stock that's just going to shoot up tomorrow unless they start significantly overshooting their stuff. But anyways, I think I've rambled on long enough about my personal opinions. I do not own this stock. This is probably not my short list to buy. I don't hate it. I think it's like I said, I think it's reasonable. If you gave me $1 million, right, today, boop, right on the chair, right next to me, or my bank account, my Schwab account right now, would this be one I would buy? Probably. Would it be would it be more than 5% of my portfolio? Absolutely not. Would it be near 5%? Probably not at all. But I would buy some. I would. I'd have to do more research. If like I said, if I looked into it and I thought what this company aligned with, I would probably buy this stock, right? I need to do more. I would need to dig in a little bit deeper into the numbers and all that sort of stuff. But this is not a bad stock. If you were clicking on this video and you're interested in PayPal, you're probably turning the wheels about this, right? So, and if you made it this far, so I'm not going to tell you what to do. But that's my personal opinion. That's kind of what I'm seeing. Let's look at some analysts, what they're saying. A lot of people are saying hold. It's more now on buy, but this month just started. It looks more so like many of these just carried over. I don't know if that's proportional, but many people are strong buy. Interesting, but the targets aren't that much higher. I'm guessing a lot of the holds are weighing it down. Anyways, if you're an analyst, that's your thing. Put some stock into it. I personally usually do not care that much. Usually I only do it to see if they confirm what I'm thinking or if they're different. I want to know why, right? So Schwab thinks it'll do good in a year. So they disagree with me. Those analysts at Schwab's are probably smarter than me, but I don't know. I don't think it's going to be a top 15%. What Schwab looks at is in 1 year outlook for stock share performance comparatively. So it doesn't factor in dividend, but they don't have a dividend, right? So they think it'll be top 15 percentile. So they think it'll grow more than 15, at least. Well, the average stock, S&P 500 grows on average. They've actually done 12% in the last 15, but we do 10, right? So assuming they think it's going to be a good year, which I think they do, they're thinking it'll grow, let's just say 10, at least minimum 10%. They're probably looking more 15 to 20. 4-star, narrow. I hate the 1, 3, 10 scaling, although 3 to 4, I would probably agree with that. They definitely don't have none, but it's definitely not 6, 7, 8 in my opinion. 3, Argus says buy, long buy. So you're getting some good stuff. ESG ratings. Yeah, I mean, that's basically all I have on this, right? I think it's a fine stock. Would I own some? Yes. Do I own some? No. Am I going to buy it like tomorrow? I don't have the capital for it, right? Money is finite. But anyways, if you made it this far in the video, I would assume you like something. Either you like the stock a lot, maybe you like commentary or anything. I'm jump starting this channel, so I'd appreciate it if you made it this far. If you liked, commented, subscribed, whatever it may be. I would appreciate that. But anyways, I just appreciate you guys watching. So I hope you have a good rest of your day, and I'll talk to you guys later. See you.